Today's discussion has to do with the sensitive subject of foreclosure. I've been getting this question here lately is either you're in the process of foreclosure, you've gotten a notice of default, which means basically a notice of default states that you've been late on your payments, either maybe 1 month, 2 months, possibly 3 months. It takes about 2 to 3 missed payments before the lender or your servicing company files what is called a notice of default, or the trustee enacts the notice of default, which is the foreclosure process. So the trustee does this. The trustee is usually your servicing company or the lender that you're working with, who you send your payment time. So foreclosure, basically what it is, states that you're behind on payments and the lender or the servicing company is invoking their judicial power to be able to foreclose on the property, basically take it back. So I'm gonna give you a couple options that you have when in the process of foreclosure. First one, number one, basically contact your lender. First step is always to work with the lender, see what the lender is willing to do. They're willing to work something out. Bringing up the situation, you could have some kind of medical issue or something that's creating you to miss payments. Notifying the lender, trying to see if you can work something out would be step number one. Step number two, again, still working with the lender, but is discussing what is called a loan modification. Now, this is after you spoke with the lender several times and you having hardship. Generally, they want you to create some kind of hardship, something that is causing you to be late. You'll divulge that information to your lender or your servicing company, and they allow you to go through a loan modification. Basically, what it means is they're willing to try to figure some kind of program out. This again was like the first one, talking to the lender, and it's modifying the loan or the terms or some process of the mortgage to be able to get you back on track. Usually what they do is they take your payments and they put them on the back, or they expand what you owe throughout your initial payment and they add it to that initial payment by little chunks, and then you pay it over time. But again, it's a loan modification, and again, it's all up to the servicing company and the type of lender. So that would be option number two. Option number three would be doing a forbearance. Again, this is still working with the lender, letting them know you have a hardship, but a forbearance is where they stop. Basically, you stop making the payment, you notify them, and they stop it for a time. Now, this happened a little while ago during the COVID era, right? Congress was able to require a forbearance on all mortgages so people wouldn't lose their homes during the COVID time. Well, now that's no longer available, but it is an option. Some lenders may do a forbearance, obviously, just to make sure that you stay in the property, protect their asset. They may be willing to do a forbearance with you, but again, it's working with the lender, it's discussing and having a hardship to be able to get the forbearance from the lender. Number four would be, again, all of these options are working with the lender, talking with your lender, figuring out what you can do. Would be a repayment plan. So this would be where, again, they could either defer the funds to the back of the loan, and obviously you're going to pay it off in time, or they add a little bit to each of your payments once you're caught up and you're able to afford the additional funds on the initial payment. Let's say you might have lost your job at the point and now you got another one and you're back in business. So they add just a little bit and you start repaying it over time. But again, it has to do with the lender and being able to work out the scenario. Number five would obviously be sell the property. If you're in a situation where a hardship is there, and I don't know, it could be a lost job, a medicals, whatever reason, could be 100 different reasons why you cannot make that payment and you're in the process of foreclosure. An option is to sell the property, right? That would What you do is basically get with a licensed professional like myself. We discuss, figure out a price for your home. Working with me, you could get a cash offer, a quick close, get the property off your hand. We could talk about taking over the payment. There's a lot of options that I provide as a licensed professional, or we could just look at what the market could bear, depending on if there's equity or not. We could figure out what a good purchase price was. Most likely you do have equity in the property from the time that values have gone up right now. There could be some good amount of equity, which would mean that, hey, we would be able to cover what you owe with the bank, still have enough time discussing with the lender, letting them know that we're marketing the property. You're either going to sell it for cash fast, which we can provide a cash offer for you, or, we're going to put it on the open market. But selling the property is obviously a great way to alleviate this and, for you to move on to your next chapter. Another great option, which would be, I forgot what number, we're probably at 6 or 7, would be obviously a short sale. Now, if you might have purchased your property here at within a year or so, you probably haven't built up enough equity in the property to be able to sell it, so that there wouldn't be, from the sale, paying all commissions and fees and title fees and all that stuff. There's not enough proceeds built in from when you purchase to what you're selling at, that it ends up being what is called a short sale. Now, again, this would be communicating with the lender, figuring out what we could sell the property for. We would do a quick CMA, which is a comparative market analysis on the property, and determine what we could get for the property today minus what is owed on the property from your mortgage. So if you got it in the last year or two, chances are, even 3, you really don't have enough equity in there to cover commissions, closing costs, if the property needs repairs, any of that stuff, and there's enough equity to get a cash offer for it, then we would do what's called a short sale. So again, we would discuss this with the lender, notify the lender that, hey, we're looking to put the property on the market. However, there's not enough equity built in where the lender will be paid off, the mortgage will be paid off, and the fees be paid off while the property closes. So we work out the difference. We request a short sale packet from the lender, fill out all the information, provide all the information to the lender. Then they'll determine if they're willing to move forward on the short sale or not. And if they decide yes, then again, we put the property on the market, notify the buyer that there is a short sale process. This takes a little bit longer to close than a traditional deal, because obviously we have to submit all that information. Once we get a purchase contract and everything, we submit it over to the lender, they review it, they okay it, they approve it. If they approve it, then we move forward with the normal transaction. They go ahead and take the short, whatever proceeds they get, they're fine with. And it also covers closing costs, commissions, and all that other stuff. So short sale is definitely a viable scenario. Again, working with a licensed professional, we can also work something out where we can potentially take over payments for you and stuff like that if the numbers make sense as well. So that's something that we provide as a company as well. So that is what a short sale is. Last but not least is obviously the scary word of bankruptcy. I know no one likes to file bankruptcy, but bankruptcy could be a great protection if you have to go that route. Again, please talk to legal counsel before making these decisions, how they affect you. Every of these decisions will affect you in some way. Because you are late on payments, obviously that is getting reported to the credit bureau. It is affecting your credit, and it will affect you on further purchases. Now, depending on how you maneuver, which process you take, will determine on how long that affects your credit and stuff like that. Bankruptcy, obviously that one will affect you a lot more, because it's basically an estoppel on the transaction, and you have to, you're going through bankruptcy that's added all into it. And then you got to discuss if you can pull that bankruptcy out, the property out of the bankruptcy, or what's not. So if you have any other questions regarding foreclosure, what other options you do have in foreclosure, or you want more information, again, hit me up in the email, comment on the chat, leave us some comments, give me a call, or any which way you want to get a hold of us. We'd love to answer any questions and help you out. Like always, please subscribe for the channel. We love to provide more value. If there's any kind of things that you want to know about, go ahead and leave them in the chat. Thanks.